Okay, the second category, the classification is a little bit nuanced. So you have to look at this from the legislator's point of view. Okay, so the category 2 is 10% of ownership in U.S. controlled partnership. Okay, so first you look at this partnership, and this partnership, like U.S. control, that means collectively, a lot of U.S. person, right? Collectively, if they collectively control more than 50% of that partnership, this whole partnership is classified as the U.S. controlled. Okay, so then here comes to the interesting part. What about you? Okay, so that whole partnership is controlled by U.S. person, right? So it's U.S. controlled. But what about you? You own more than 10%. You own 10% or more during a time the foreign partnership was U.S. controlled. Okay? And you may think, wow, what about, I already filed category 1, right? If there was a category 1 filer at any time of that year, no one is category 2 for that year. Okay, so this is like mutual exclusive filing requirements, category 1, category 2. Okay, so basically, let me quickly go through these two scenarios. Okay, owns at least 10% of a foreign partnership that are U.S. controlled, or U.S. controlled, or 50% owned collected by U.S. person each for more than 10%. Okay, let me just give you some of the scenarios so you get the direct understanding in the specific scenario. Okay, so for example, a lot of you and your business partners, try to invest in a say Singapore partnership. Okay, and so for example, four U.S. partners forming a Singapore partnership. Okay, and each of them do not have the overpowering control more than 50%. Okay, so for example, they own things equally, right? You and your 3 of your mates, 3 of your partners, each own 25% in that Singapore partnership. Okay, you got 25% too. Okay, so that's more than 10%. Okay, and here is the catch: no one have more than 50% alone. Okay, because each of you and your mates, your partners, right, you got this more than 10%, but less than 50%. Okay, but you know what? The whole group, the whole gang, right? More, the 4 people control 100%. That's definitely more than 50%. Okay, and of course, each of you is more than 10%. So you know what? At that year, you are the category 2 filer. Okay? And of course, if you think about this, no category 1 filer exists at this scenario. Okay? So that's the typical example. US controlled, the whole partnership is US controlled, but no single controller, because you sort of own things equally. No single controller, and no, like, if you think about it, a single controller is like more than 50%. One person can decide everything. Okay, but you know what? It's a partnership. Everything is equal. You have to vote. Okay, so you know what? No category 1 filer, so you are the category 2. But what about let's continue that Singapore partnership, equally owned partnership, like 4 people. Each of the U.S. person owns 25%. So what about under that specific scenario, so for example, certain like mid-year, right? A U.S. person appeared, right? Pretty wealthy U.S. person, and say, well, I want to buy, some of your partner's shares, and then a little bit more share of another partner, right? So basically, if they buy, and then they will have, say, 55%. Okay, so that's more than 50%. You know what? From that mid-year, from that specific point, there is a category 1 filer. Okay, because that person single-handedly say, well, I'm a US person and single-handedly they own 55%. That's a control. Come on, that's more than 50%. That's a control. So they're classified as the category 1, which is control, right? So there is a category 1 filer during that year. So no category 2 filer for that tax year. Okay? So I know this is a little kind of a little bit confusing, okay? But there's just a very weird exception of this rule. So if there is a category 1 filer at any time of that year, no one is category 2 filer. Okay? And you might think why they need to do this. Why there is like a category 1 filer and then there is like no category 2 filer. Just think about this, okay? You don't need to like look at things from your point of view. You need to think about why they put this legislation, why they put these regulations, because it's IRS regulations. So from the IRS point of view, if there is a category 1 filer, that's control, right? As I said, category 1 filer, unfortunately, we have a lot of heavy reporting going on, like for nearly equal to full financial reports, because someone will have control. But if there is one category 1 filer, okay, IRS already got all information about that partnership, okay? So from IRS point of view, I already collect that information. They don't want some like small partners, unfortunately. For example, if you're category 2 filer, you want small partners, right? You don't need that like duplicate filing, because you know what, IRS is pretty busy. Why receive like 2 and duplicate filing? Okay, they already got the most full information from category 1. Category 1 is a full disclosure. You got balance sheets, income sheet, transaction, everything. Okay, but if you just got category 2, that's a limited disclosure. Okay, so basically meant for when no one has control. Okay, you just invest a small portion part of it, but the whole thing collectively is still US owned. Okay, they just require limited control. That's enough. Okay, so yeah, and if there is a category 1, IRS got like a full financial information. The ownership list is already know who own this, and they got a partner information, the detailed schedules and all that. So yeah, so basically, yeah, and I think IRS already explicitly say that. Okay, so you don't need to worry about this.